Okay, I'm back, everyone. Welcome back to the Stock Market Technical Analysis. This channel is all about finding trade ideas before they actually play out so that we can profit on those trade ideas. So if you're into that, if you guys are finding value in the channel, drop me a thumbs up. I do continue to try to point out trade ideas and we look for opportunities. So let's get into it. Quick note, I will be out of office on Friday. Not going to be here for making a post, so I'm heading out for the weekend out of town. So just let everyone know I'll be out this Friday. The other thing is tomorrow is the CPI reading. That's the inflation reading, and that's a big market moving event. The market is trading. Everything right now is based, and it's been this way for years. My interpretation of the market is everything is dependent on what the Federal Reserve is going to do. So it doesn't matter about earnings. It doesn't matter about geopolitical events, wars and whatnot. What really matters is, at least from the market's perspective, from what I've seen, is what the Fed's going to do. So are they going to ease? Are they going to tighten? And that's about it. So tomorrow is CPI, and that is what the Fed has been really focused on, is getting that CPI reading to come down. So if we see the CPI come in a little bit from the highs, we're likely going to see a market rally. Okay, that should be bullish for gold. That should be bullish for tech stocks, growth stocks in general, because what's going to be in play in that situation is the fact that will give the Fed some leg room to throttle back on its rate hikes, or at least the rhetoric. Okay, at the end of the day, I do not believe the Fed is going to hike rates that high. They will talk a big game, but they will not actually do hike the rates that high. And it's kind of evident. I think it's evident if I look at the Federal Reserve balance sheet. Here it is right here, and you can see that the Fed, they talked about reducing their balance sheet, and you can see they've just barely started reducing it. So at the end of the day, they're really good at buying bonds, but when it comes to tightening and actually reducing the balance sheet, they mostly just talk a big game, and there's not much reduction. So that's kind of what I'm seeing. I see, if the CPI comes in, the Fed will back off, and we're never going to get that high of interest rates, at least not right now. We're likely going to see them pause. All right, so getting into the market charts, let's start off with Triple Q's tech sector. I've kind of cleaned up my chart a little bit, just, had a fresh look at the charts after being off for a week. And here's what I got. All right, I've got a couple things. It's a bullish chart as of right now. I have a bullish falling wedge pattern, big bullish falling wedge on the daily chart. Okay. I have bullish divergence remains intact. You can see bullish momentum. All right, momentum is moving higher and higher as price has been drifting lower and lower. Bullish momentum. So that indicates that we're likely going to see a sustainable rally when we have bullish momentum on both momentum indicators, the PPO and the RSI. Guys, if you're unfamiliar with these concepts, check out my Stock Market Technical Analysis course. I put that together for my subscribers, link in the description below. It's not free, but it's affordable. I don't give my time away for free, but at the same time, there's a lot of value there, and I priced it affordable. It's about 4 to 5 hours of video trainings, breaking out multiple concepts from technical analysis, risk mitigation, risk management, candlestick analysis, multiple different subjects, and a checklist that gives you guys the ability to really check things off to find good trade setups and good trade ideas. Check that out. Link in the description below. Okay, the other thing is we did have a breakout of this wedge right here. There's your breakout. That would be a buy signal on the daily chart, and that came on July 7th. So as of right now, what I have is a bullish falling wedge pattern, bullish divergence, breakout, or a buy signal, and we're coming in for a back test these last few days. Again, right before the CPI reading. So I guess if I had to put odds on it, I'd say that the CPI is going to come in a little bit. It's not going to be as high as it was previously, and from that, the market should rally. So breakout, back test, and maybe we rally tomorrow. Resistance levels to watch for. where I think we're likely going to get a reaction on this, probably about this 299, 300 area, because we have a gap to fill right here on the daily. You can see these two gaps. So we've already filled the first gap right here, and I think we probably filled this next gap on the next move higher, which I probably is going to come tomorrow on Wednesday, up to that 300. Get a pullback there, and then probably next level. You know, I see a nice solid level of resistance about this 315-ish area. You can see here, this was a nice zone of support. They stepped in a little early. Let me grab that right there. Stepped in a little early there. Support here. Had some reactions here. And then previously, you can see right in here, it's been resistance right there. So if we're going to rally, 300 would be the first stop and probably that 315. And then the bigger picture is we have a downtrend to watch coming off the all-time highs right back here on triple Qs. So there's resistance and there's the downtrend there and a tag of that, which would be up around 330, 329. You got the 200-day kind of heading down. So if we're going to get up there, that would likely be the final area of resistance, all right, around 329, 330-ish. Or that 200-day. Okay, so that's where I see the potential of the rally to go. 300, 315, 330. Not going to happen all at once. We're obviously going to get reactions along the way, and this rally might take weeks to months. Okay, here's another look at tech. Again, I'm interested in the growth stocks long because if the Fed is going to start to signal that it can ease off its interest rate hikes, tech should benefit the most. And gold stocks should benefit as well, but definitely tech. On this one, you can see XLK. We've got support down here. All right, lots of tags of that. We have a bullish falling wedge pattern here, and this is resistance up there. We also have bullish divergence that's really been building for quite a while right there on the RSI, and it's down here on the PPO as well. So bullish setup. But we're there at resistance basically today. So you can see no breakouts. Triple Qs looks like as a breakout. This one does not. So depending on what happens tomorrow with that CPI reading, we might get that breakout. And that would signal that tech will, continue to rally. All right. That's all I got on that one. The other thing on this one, if you roll out, we recently hit that support level at 125. You can see that was big. That was a big level right there. It was resistance all through here. I had that marked out. Then it was support once we broke. Support. And we recently hit it again. Undercut it just briefly and then recovered it. And it has held as support. So in general, until that level breaks, we should, we're bullish in general. So that's what I'm watching for. Now, if the CPI comes out extra hot and it signals that the Fed has to continue to hike rates, then you're likely going to see the markets sell down. But there will come a point here in the near future where the Fed is going to have to stop. All right, they're going to talk like they're going to hike, and the market can react ahead of that. But it's very unlikely that the Fed is not, that they're going to be able to hike rates, too much more. All right, I think maybe they could get another 50, maybe another 250 basis point hikes, getting us up to like 2.5%, maybe 3%. That's probably about the max, and I don't even know if we'll be able to go that high. So I think more than likely we're closer to the end of the rate hikes than we are the beginning. But that's what we'll see. One thing the Fed might do is just signal a pause. Okay, not signal a cut, obviously, just a pause saying we need to wait and to see how everything digests, and then we're going to continue rate hikes in the future, but we're going to just pause for a second. All right, so I think that's there's some decent probability in that. So looking at some of the stocks that are my favorite, probably these FANG stocks. Obviously, this is the ones everyone wants to buy on pullbacks. So likely they'll be the stocks that everybody wants to pile back into. Meta, bullish falling wedge pattern. I have that marked out. Nice clean bullish divergence on the both momentum indicators. No buy signal, no larger buy signal, but definitely a nice clean bullish falling wedge pattern. So buy signal would come on a break above this pattern. There's a gap to fill right up here, so we might fill the gap and just continue to run. But breakout would be the solid buy signal on this thing. So look for that. We don't have it yet. Apple has had a buy signal. So here's the downtrend on the daily chart in Apple. You can see we got a breakout right there on July 6th. Bullish divergence was intact on both momentum indicators, and we have a breakout. So this one to me looks like it's going to continue to run at a minimum up to the 200-day moving average, and that's probably where I'd look to pull it. Possible we could backtest this trend line right here. This is your zone of resistance, all the way from the 200 up to this trend line about 162.50. That's the clean uptrend line there, big level. So a backtest of that is major resistance, and that's where I'd be looking to reverse short. It's about halfway already there, but still have another 7 to 10% into that zone of resistance. So Apple could take a breather while some of these others start to run, but in general, looks like it's continuing higher. Microsoft, not as interesting. Kind of looks like it's drifting sideways, slightly up, at least in the near term, but just kind of drifting sideways. Google, same thing, just kind of drifting sideways. Nice bullish divergence here, clean bullish divergence. So I think we can continue higher up to the 200-day moving average. But just need to kind of break above those most recent highs. And same with Amazon, holding support like a champ, 101.82. You can see it's tested it once, twice, cluster right there. So there's another test of it there. So 4 tags of that support line, and it's held each time, but keeps getting sold into. So we'll see if that can hold. Bullish divergence is intact, so I think we can continue to push, and probably, there's a resistance zone on this one about 136, so that's about as much as I'd probably be willing to let that one run, and that would be a nice gap fill into the resistance. So look for that, but just kind of middle of the range right now. Okay, Netflix. I really like this trade setup. It's not actionable yet, but again, it just continues to look good. I'm just waiting for that buy signal on Netflix. Clean downtrend line right here to watch. All right, you can see that clean bullish divergence that's been building for quite a while on both momentum indicators, telling me that we're likely going to get a rally. But we need to see a buy signal. We need to see a breakout of this trend line right here, and we just don't have that. You can see each and every time we get right up to it, they just keep selling it down. So rejected, rejected, rejected. Once you get that bullish breakout of this trend line, it should be a pretty clean trade. Objective targets for this one, I've got up here at about 246 as a clean level. Let me kind of clean this up so I can actually see the wick. Yeah, it's about 246 or so. So right in there is the zone of resistance. And then if you break, so you're likely going to get a pullback there. And then if you break above there, you've got a huge gap to fill up here at 329. So I could see us breaking out, running up. There's also a little level of resistance right here at 203.90. So maybe we run up, hit that, consolidate for a few days or a week or so, break higher, hit this zone, probably get a pullback, and then potentially run all the way up and fill that gap for a final profit target. So 329 would be my final profit target. Just trying to point out the zigs and zags. We don't have an entry yet. We don't have a buy signal, but it definitely has a good bullish setup. So we just need that catalyst. PayPal, bullish falling wedge pattern. All right, on the daily chart, clean bullish falling wedge pattern here. You can see it right there. Bullish divergence on the momentum indicators, telling me that we're likely going to get a rally. We need a breakout. We need a buy signal, something breaking above this trend line here. All right, big green candles, your breakout. You do that, you're likely going to run up and fill these gaps. All right, you got a gap right here, so maybe get a small reaction at that gap. I see good resistance, a nice clean level here at 93, okay? That's probably the best level. So I would say minimum target from my perspective is probably 93. And from where we're at now, or just depending on when we get the breakout, that could be a move of about 30% or so. We do that, and then, possibly a lot higher, maybe all the way up to this trend line at 141. That's a ways up there, obviously 100% or so. These things can rally, though. They've been sold pretty hard from the all-time high on this one down to where it's at. It's been sold off about 80%. So to see a rally up to 140 is just recovering some of these massive losses. All right, so there is potential there. And that 140 area, if I roll out, that's your uptrend line. That's your bull trend in PayPal starting back in 2016. You can see all the tags of support there. And so to rally, to break out and rally and do a back test, that would be perfectly normal. That's a zone of resistance. I'd be looking to short this thing. Okay, so there's a bullish setup, not an actionable trade yet. Okay, gold. Let's look at gold bullion. So not a really good looking chart for sure. We've got a level of support right about here at about 1757, and we're just slightly below that. The thing is it's hard to make a bullish case on this chart as of right now. We're right before the CPI reading with the Fed, so that's clearly going to have an impact on where the next move in gold is. To me, it seems like tech is going to rally because the CPI is going to come in, and it should be bullish for gold if the CPI comes down because it's going to tell the Fed that they can ease off their rate hikes. And essentially the Fed gold's been selling off because of the dollar strength. Okay, the dollar has been strong. Let's go to the DXY and I'll come back to gold. The DXY, though, has a little bit of a different look than gold, and so you definitely want to pay attention here. So the dollar's been rallying because there's been weakness in the yen and the euro. But you can see on the daily chart we have negative divergence on both momentum indicators. Okay? Not fully confirmed, but definitely we have it there. So each new high the dollar's been making is a divergent high. You can see that's a divergent high. That's another one, and we have another one now. And we're right before the CPI reading. So what I would look for is, a potential sell signal. All right. I think if the CPI comes in the dollar, this might be the high in the dollar. Now, there's no guarantees that this is a high because all we have is a divergent high. We have a potential trend line to watch right here in the DXY where we have support. So a break of that should send us down to the 200-day moving average down here. And then we'll probably bounce off of that, get some sort of a rally down there at about 99. And then, we'll have to wait and see, but I suspect we head lower from there. Okay. So again, this is kind of just set up for what that CPI reading is going to be. I'd look for a big sell-off in the dollar after that CPI, but maybe we don't get it, so we need to wait and see. And then going back to gold, so this level right here of 1755-ish is decent support, and if we do get a rally in gold after the CPI, then we might have a false breakdown or a bear trap. Okay, so that's really all I see is potential. Nothing really actionable. And in fact, this chart as of right now is a bearish chart. So until you see a false breakdown or a bear trap, it is bearish. That's all I got on that one. Same with the GLD. Really, just in general, you can see here the bull trend starting in 2018 has now been broken. So you can see that we basically have support all through here. This isn't the strongest trend because I only have a couple reactions back here in 2018 and then another one in 2019, and we haven't really had a reaction since. So definitely not the cleanest chart, but pretty impulsive selling right there on this daily when we broke that. So slicing right through the bullish divergence that was there I just don't see it anymore. So in general, not a bullish looking chart. It's a bearish looking chart. And unless we see some sort of swift recovery, that's what we have. We have a bearish looking chart. GDX, which is the gold miners. Let's go ahead and look at that one. So the gold miners still have bullish divergence, just barely. You can see we're drifting lower in price, but yet we still have higher momentum on both momentum indicators. So if we see a quick reversal and the miners rally after the CPI reading, and it's likely going to happen tomorrow if it's going to happen, then we would have confirmed bullish divergence, and this would be a divergent low. The other thing to look for on the GDX, so starting back in 2016 is your bull trend. You've got a reaction here. We hit support there. COVID, we just kind of sliced through it, and then we're below it now. So if we can snap up and recover after the CPI reading above this 2780, then this is a bear trap setup, and we should have a pretty strong rally. Another area of resistance to look for. See this downtrend line here on GDX starting back here. We've got lots of reactions along the way. So a break above that would really be the buy signal in my book. And that would be above this 2820 area. Okay. So you see that, you're probably going to get a pretty strong rally, and we'll have a bear trap in play. But until I see it, it's a bearish chart. And just looking at some of the miners, the gold, the metal, it looks like a bearish chart, but some of these miners still have relatively bullish setups. So there's cross signals that I'm getting. The dollar has bearish divergence. It's making a topping pattern with these divergent highs. We don't have a sell signal yet. And these miners have bullish charts, like Newmont miner, largest gold miner. Bullish falling wedge, bullish divergence, all right? So you have a bullish setup. You don't have a catalyst. We don't have a breakout or a buy signal, but you have a bullish setup. And that's the largest miner. Looking at some of these other miners, HMY, bullish divergence. All right, this is divergent low action. So I'm just seeing it across the board that some of the individual miners have bullish setups. The metal doesn't look great, but the miners look okay. They look decent, some of them, with some bullish setups, just no catalyst. And then the dollar looks like it's topping, but no catalyst. Tomorrow is likely that catalyst with the CPI reading. So just want to point out what I'm seeing and how to react. We might see a strong rally in the miners tomorrow. But watch for the dollar. Watch how that reacts as well. Oil, so here's oil futures heading down to support. All right, we got some support right there at about 93.70. You can see that's horizontal support right there. And it was resistance back here, and then it's also this, you have this trend line to watch coming off the 2020 lows, support through here, and it would be support right through here. So likely going to see oil hold in this area and probably get a bounce. That's what I see right now. No real divergences. So maybe we need to, chop around and kind of spike down and make some lows. I don't see any divergences. So it's not anything I'm really interested in trading right now or in terms of oil. I can see oil pulling back a little bit more, and likely that's going to be bullish for the market as well. Going back to the CPI reading, oil and energy is a big component of that. And from the, really from the all-time highs, oil is, or these highs, these most recent highs, oil is down about 26%. And then this most recent drop right here, it's down about 22%. So that should have an impact on the CPI reading. It really should. So you see the CPI start to come in, and that should be bullish for the market. DBA ag commodities, this is another one. Clearly breaking down in a downtrend. So this one's in corrective pattern. It's in a larger bull market, but we're in a correction within that bull market. So I think we head lower on this one. This is this is your ag commodities. There's your bull trend on the daily chart. You can see clear impulsive leg one, counter trend rally up to resistance. Didn't even get to the 200. They're selling it down. Look for this area. It's about 1950 to break. If that breaks, we should head down to the next level of support, which is about 1760. And yeah, we'll watch that. Good support there. So maybe we get a bounce there. That could be the end of the correction. But from the highs down to that level would be a drop of about 25%. So I can easily see us getting down there, maybe even a little bit more, but definitely down to about there on this correction. And I'll probably look to be a buyer of these ag commodities down here. Zillow Group, bullish falling wedge pattern. Nice clean bullish falling wedge on the daily chart. Bullish divergence on the momentum indicators, no buy signal, no breakout. All right, we just need to see a breakout of this trend line, and that's the general theme. I'm thinking there's going to be some rotation back into growth as we see a growth rally, bear market rally, but nevertheless a rally. And so I'm seeing I'm seeing some of the winners, which has been energy and commodities, going into correction, and I'm seeing some of the potential for the losers, which has been tech and growth, going in, having a bear market rally. All right, and so we're looking to trade that. That's all I have for today, guys. Go ahead and drop me a thumbs up on your way out. Check out the course, and I'll catch you on the next one.